Welcome back to our deep dive, tailored just for you. Today, we're really getting into some significant news around Ford Motor Company.
Yeah, specifically their Q1 2025 earnings and how these new tariffs are shaking things up for them financially.
Exactly. So our mission here is to figure out, what are the key things you should take away from this?
Like, why did they beat expectations but then pull their financial guidance for the year?
Right. And what exactly are these tariffs? How big a deal are they?
And ultimately, what does this tell us and you about the wider auto industry right now?
Okay. And just a quick note, this deep dive is brought to you in part by Stonefly. We'll share a bit more on their data storage solutions later on.
Sounds good.
All right, let's jump in. Ford dropped its Q1 2025 earnings report. And, looking just at the headlines, it seemed pretty positive.
Yeah, they actually came in ahead of what Wall Street was forecasting.
They did. Earnings per share adjusted was 14 cents. The expectation was only 2 cents.
Big difference. And revenue.
Automotive revenue hit $37.42 billion, also beating the expected $36.21 billion.
So, a solid beat on both fronts. Seems like a decent start to the year operationally.
It does. But alongside that news, Ford made a really big announcement.
Here it comes.
They're suspending their financial guidance for the full year 2025.
Okay, wow. And the reason?
The main driver they pointed to, this is really the core of it, is a predicted $2.5 billion hit from tariffs.
Right, these tariffs. Let's unpack those a bit. They're tied to recent policy decisions, aren't they?
Yeah, affecting imported vehicles and auto parts.
Specifically, we're talking a 25% levy on imported vehicles and a similar tariff on most auto parts that aren't compliant with the USMCA, the US-Mexico-Canada agreement.
And those kicked in, early April?
That's right, beginning of April. So the impact is starting now, basically.
So that $2.5 billion, that's Ford's estimate for the full year tariff damage. Are they just absorbing all of that?
Well, no, they do expect to offset some of it. About $1 billion, they figure.
How are they planning to do that?
Through various actions like logistical changes. They mentioned stopping U.S. exports to China, for instance, and tweaking how they handle imports from China.
Okay, so they claw back $1 billion, but that still leaves
A net impact of around $1.5 billion for 2025. That's the current projection.
$1.5 billion. That's still a hefty number. But interestingly, I saw that General Motors is expecting an even bigger hit.
Yeah, significantly bigger. GM's talking something like $4 billion to $5 billion.
Wow. Why the huge difference between Ford and GM on this?
It really comes down to where they build their cars. Ford imports fewer vehicles into the U.S. compared to GM.
Ah, okay.
They actually manufacture over 80% of the cars and trucks they sell to U.S. customers right here in American plants.
So that domestic production shields them somewhat.
Exactly. It gives them a bit more insulation from these import tariffs. It really highlights a strategic difference there.
Makes sense. Okay, so tariffs are the main reason for pulling guidance, but they mentioned other near-term risks too, right?
They did. It wasn't just the tariffs, although that's the big headline number. They also flagged the potential for industry-wide supply chain disruption impacting production.
Right, something we've unfortunately seen a lot of across different industries lately. That uncertainty is still out there.
Definitely. And they also mentioned worries about potential future tariffs, maybe even increases to the current ones in the U.S.
Oh, so more uncertainty down the road.
And the possibility of retaliatory tariffs from other countries, too. So, a complex international trade picture.
Plus, ongoing policy questions around things like tax and emissions rules.
Correct. All these things combined create a really uncertain environment for forecasting financials accurately for the whole year.
So it really sounds like if it weren't for these tariff clouds hanging over them, they felt pretty good about their original plan for 2025.
That's exactly the impression they gave. They said they were tracking toward their initial guidance without these tariff headwinds.
And remind us, what was that initial guidance?
They were aiming for adjusted EBIT, that's earnings before interest and taxes, a key profit measure between $7 billion and $8.5 billion.
Okay.
And adjusted free cash flow of $3.5 to $4.5 billion, with capital spending pegged between $8 and $9 billion.
So pretty solid targets they thought they were on track to hit?
Before this tariff situation really escalated, yes.
Okay, so the future guidance is paused due to all this uncertainty. But let's circle back to Q1 itself. We know they beat the estimates, but how did the actual numbers compare year over year? What's the underlying trend there?
Good question. Because beating estimates is one thing, year-over-year trends are another. Total revenue for Q1 was $40.7 billion.
Okay.
But that was actually down 5% compared to Q1 of 2024.
So revenue dipped year on year. What about profits?
Adjusted EBIT took a significant hit. It came in at $1.02 billion for Q1 this year, compared to $2.76 billion in the same quarter last year.
Oof, that's a big drop, more than halved.
Yeah, and net income followed suit, down from $1.33 billion last year to $471 million this Q1.
So, despite beating lowered expectations for the quarter, the actual performance compared to last year shows some pretty significant declines.
Definitely. It paints a more nuanced picture than just the headline beat.
Let's break it down by their business segments. How did the traditional gas-powered cars, the Blue division, do?
Well, Blue saw a smaller revenue dip, only 3%, but its EBIT that basically collapsed,
Collapsed.
down almost 90% to just $96 million.
Wow, nearly 90% drop in profit from their core traditional auto business. That's
Yeah.
dramatic. What about the pro commercial side?
The pro business, trucks and vans, saw revenue fall 16% to $15.2 billion, and its EBIT also dropped quite a bit from over $3 billion last year down to $1.31 billion this quarter.
Okay, so significant profit drops in both their established gasoline and commercial vehicle lines. Was there any part of the business showing improvement?
Yes, actually, the Model E electric vehicle division.
Ah, the EVs. How did they fare? Still losing money, I assume.
Still operating at a loss, yes, but the loss narrowed quite a bit.
Oh.
They lost $849 million in Q1 this year. That sounds like a lot, and it is, but it's much better than the $1.33 billion they lost in Q1 last year.
Okay, so they shaved off nearly $500 million from the EV loss year over year. That is a positive trend, suggests maybe they're getting a better handle on costs or efficiency there.
That seems to be the implication, yeah. Some progress on making the EV strategy more cost-effective, even if it's still burning cash overall.
Right. So bringing it back to the tariffs and that $1.5 billion net impact, what does Ford think this means for car prices for you, the buyer?
Interestingly, despite that big cost hit, Ford's leadership doesn't seem to expect a huge surge in overall U.S. car prices.
Really? You'd think absorbing $1.5 billion would have to show up somewhere significant on the sticker price.
Well, Ford's CFO, Sherry House, suggested prices might just edge up, maybe 1% to 1.5% in the second half of 2025, specifically due to tariffs on both imported cars and parts.
Only 1 to 1.5%. That seems manageable, almost surprisingly low.
It does. She did add a couple of caveats, though. One is that automakers, maybe industry-wide, might pull back on buyer incentives soon.
Ah, so the effective price you pay could go up sooner, even if the sticker price doesn't jump immediately.
Exactly. Fewer discounts means a higher transaction price. And she also noted that new models rolling out in the fall could carry higher sticker prices across the industry. But she didn't specifically say what Ford's own strategy would be beyond that general outlook.
Okay, so maybe a small direct bump later, but watch out for fewer deals and potentially higher prices on brand new models this fall. What about overall sales volume? Do they expect these tariffs to impact how many cars people buy?
Yeah, Ford is actually anticipating a pretty noticeable drop in overall industry auto sales later in 2025.
A drop. Why?
They think there might have been a bit of a rush to buy vehicles before the tariffs fully took hold in April, and that sales might cool off in the latter part of the year as the effects bite.
Interesting dynamic. So Ford's facing these headwinds, they're adjusting. What's their overall message about their strategy? Are they sticking with their Ford Plus turnaround plan?
They're definitely emphasizing that, yes, the Ford Plus plan is still working, as they put it,
And the goal of that plan, again, is?
to transform Ford into a company with higher growth, better margins, more capital efficiency, and just generally be a more durable business long term.
And they've already taken some steps on the tariffs, right? You mentioned stopping exports to China.
Correct. Those actions, including adjusting China imports, apparently help them reduce their Q1 tariff impact by about 35% from what it might have been. Otherwise, maybe save them around $200 million just in that first quarter.
So they are actively trying to mitigate these costs already?
Seems so. Proactive adjustments within their existing footprint.
Have they hinted at any bigger changes, like shifting where they build cars for North America?
Nothing publicly announced on major shifts to their North American manufacturing footprint, no. But these trade flow adjustments show they are definitely responding to the new tariff reality.
Okay, so wrapping this all up, what's the big picture takeaway for you, our listener? It seems like a really complex moment for Ford.
It really is. They had that better than expected Q1 start, but boom, these unexpected tariff headwinds hit hard.
And the uncertainty from those tariffs, plus potential supply chain issues and future trade policy shifts, it's enough for them to just pause their whole financial forecast for the year. That's a big move.
It absolutely is. It signals significant unpredictability. And the fact they expect only that modest 1.5% price bump despite the $1.5 billion cost.
Yeah, that suggests they're planning to eat a lot of that cost internally, right? At least for now.
Seems that way.
Yeah.
But like we said, keep an eye on those buyer incentives potentially drying up and what happens with sticker prices on new models this fall. That could be where you feel it more directly.
Definitely something for you to watch if you're thinking about buying a car. This whole situation also just highlights how much things like trade policy can ripple through major industries.
Totally. Financial plans can change fast based on these external factors. It shows how linked everything is globally. Supply chains, tariffs, company profits, and eventually, maybe the price you pay.
And speaking of navigating complexity and ensuring things keep running smoothly, even with uncertainty, this deep dive was brought to you in part by Stonefly.
Right. They focus on robust data solutions, which is crucial when things feel unpredictable, like secure network-attached storage.
Absolutely. And if you're looking for a powerful solution for your critical data, check out the Stonefly 100TB Immutable and Air-Gapped SSO NAS. It's currently available for $8,995.
That kind of system provides a really secure, protected space for vital information. Mutable means the data can't be changed or deleted, and air-gapped adds another layer of security against online threats. SSO simplifies access.
It really makes you think about how vital protecting your organization's data is in today's world. A solution like that could offer some real peace of mind.
For sure. It leads to a broader question for you to think about, too. How are these big global economic shifts and policy changes affecting the industries you follow, or maybe even work in?
Yeah, it's a good reminder that understanding these larger trends gives really valuable context for what's happening with individual companies like Ford here.
Well put.
Well, thank you for joining us on this deep dive today. We hope breaking down Ford's recent news and the tariff impact has been insightful for you.